Okay, so it's going to be myself and Gamma today talking about kind of best practices and how to learn how to day trade. Gamma, why don't you start and kind of tell me what's going on with what you were asking, what you were requesting.
Yeah, so in mastery, I've been the questioner came up from just studying other people in different fields, like experts and people who've achieved high success. And going, good example, Tim Grover, in his book Winning, and he trained. I'm not sure if people are basketball fans, but Michael Jordan and Kobe. And
Okay.
it was through Tim specifically, that they were able to have such high success through his trainings. And there was a key point that he would be that each person was different in how their style, but their base was always the same, and it was the basics, the fundamentals. No matter what changed and how they attacked each daily obstacle. The fundamentals was taught the same throughout each player. So, and I've come across to hear this from other high achievers. Is they're just stuff they just keep going over and over again. It's boring, but they go back to it. So I was like, well, I've been thinking there has to be that same type of thinking with trading. And here we are. What are the fundamentals of trading? And I've been trying to think of that. What are the basics, going that you're going to keep using over and over and over again, no matter what theory you see or use, or how your style is. There's a ground level, the foundation, like in a building, the foundation.
Okay. Turn my screen share on here. So you're talking about the foundation, like kind of my go-to, just so I understand what you're asking. You're asking about kind of like what's the go-to set of rules that we use, or what's the go-to kind of information? Like what is the baseline, like the hierarchy? Is that what I'm getting at?
Yeah, the a fair comparison would be going to yeah, what's like the basics that are repetitively used, kind of like how Mr. Miyagi, yet again another reference, Karate Kid,
Yeah.
he teaches him wax on, wax off. That's a
Right.
fundamental. I'd say that kind of transferred over, if that makes sense, transferred over into trading. What are the fundamentals of trading?
Right. So I think you're referring to the technical analysis, like which steps do you take, right? Like if you had to label them step one, step two, step three, step four.
Mm,
Yeah.
okay.
Okay. Is that yeah, that would be correct. Would you say that's accurate?
Yeah, things to look for. So for example, I would say just things I piece together would be obviously finding polarity where we're at in a larger ranges, so time frames down.
Okay, so this is actually kind of an easy one to get into and answer. I'll kind of go through my routine and what I do when I'm trading,
Yeah,
and the steps that I do to kind of create a baseline for the things that you would be looking for, right? Like if you were to just jump in a blank chart every day, I'll just even use let's just remove all drawings. I'll just even use my own chart here to illustrate that. So like one of the first things here I would use is like just understanding the total space of the market, right? Like just, you've got your first kind of thing here, which is just like a weekly origin that was tested. And then just moving down into this even more and just going to, another origin from a different time frame tested here. So, you have one origin here tested. It breaks a move down. You have another one tested here. You have another, smaller one here before you get back into the stuff here that would ladder the move from a backside. So like always understanding what happened in the market from the past is always critical. Like just step number one, just understand the direction of the market. For now, it looks like we're still moving down. We haven't even yet hit a leg of the move yet. So if you were looking at this and you were saying like what's going to happen next, you'd say, okay, this thing's still breaking down. It could, try to move up against its move, but you know, whenever you hit an origin, you know, you're just going to come and break that move, you know, one day. So this will break that move and hopefully ladder off this stuff down in here, or, you know, it might even go down to some lower stuff like this right here, right? Like it might even go lower here. So this is always like the first thing I like to do is just overall market what's happening, right? Because it just gives you a nice kind of expectation to have whenever you're doing anything. And then I would simply go and you could hard close this to find the correct trend. You'd go here, wait a second, you'd go here on the weekly, then you'd go here, you know, then you go here, then you'd go here. And right now we don't have another, oh, sorry, right here actually. Yeah, right now we don't have another close of this. So you simply just have like a weekly trend. So, you know, your first assumption is that if this trend continues to hold the move, now that you've created it, you're going to eventually end up down in these regions down here. So, you know, we've created a trend. If it doesn't break and it continues to hold, you're likely going to have some kind of move down in Bitcoin. So like always just having this understanding is key, right? Just change these to weekly colors here. So like this is the first thing I always like to do is just to scope out kind of what my expectations are in the move, right? So like right now I would just see this as kind of like an elongated move that just continues to go kind of back and forth. And, you know, I'm sure we have other trends on this side that would be like from here to here. And then, you know, we'll have interior trends that will end up being from like here to here. So you have interior trends on either side. And I think eventually, you know, you get back down to this place down in here where maybe you hit a backside, maybe you hit something off of this, or maybe even just hold this as a reverse. But there's going to be some level that you hit in here that's going to give you your trend. Like maybe you spend the next couple months falling a little bit and you come back down to this 20,000 range and you're going to kind of create this like elongated thing in Bitcoin before you see if you're going to go down here or if you're truly going to continue laddering the move, right? Like I think if you go down and hit this 16.2 level again and you hold it, maybe that's the point where you can ladder the move and break up. But this is always like my first step whenever I'm doing anything, just kind of outlining the larger pieces of what's happening. And it's not making my day-to-day decisions. It is just allowing me to have a good rounded perspective of where things are going. So there's no surprises. Like if we drop down to 16.2 again, I wouldn't be surprised at all. And if 16.2 held the move, I wouldn't be surprised at all to see it run up to, you know, something up in here and break over this stuff. So like at least it gives me a good general expectation. So I'm not blindsided by anything. So I don't have, and one of the important things about this is to not have these MA surprises, to not have this moment where you're completely caught off guard. You're sitting there like, oh my God, it moved up. I can't believe it. And you just have this overwhelming or kind of this, yeah, I would just say this overwhelming feeling of where did that come from, right? I think it just helps keep your mind clean because with no surprises, you're just like, oh, okay, cool. It moved up. I saw that. It broke a trend. No big deal. That clarity gives you, like that clarity on the bigger time frames just gives you kind of an ease of mind or an easement to the charts, right? So that's kind of my first step is always just looking at the larger picture of what's happening in a move. Again, partial TA, but more so MA because this doesn't really, again, it just doesn't do anything for me. Like I'm not expecting these trades. Like if a trend holds, great, but I'm not using a weekly trend to, you know, define that far out, right? Like that would be pretty crazy to use a trend that far out to hold the move, right? And to start scalping and trading your day to day on there. Like you would target the interior things first. So with that said, I now have a trend. I can see it's holding. So then I start to make my assessments. Like the first thing you do, so your number one step is just define some overlying parameters on your chart. Your next step is to use those overlying parameters and start creating interior moments where you think things can happen. Like an interior moment right now, for example, would be, do we have anything here? Not really. We don't have any origins here. So like I would like to just start my next step by just saying, okay, is there polarity anywhere? So my second step would be just finding moments of polarity to say like, okay, if we break something, what's going to happen? And I'm sure there's probably like a 4-hour up here and maybe even something back set from here. So like the next thing I want to do is I want to focus on this right here because I see that we have a trend. I see that the trend is holding. I'm not taking into consideration that trend too much, but what I would like to see is kind of where polarity can exist on this move. I do feel like there could be an hourly here, and outside of that hourly, there would be no, can't be anything back there because that's broken right there, right here. So like, I'm assuming this is your 4 hour right here. Well, I'm not assuming, it is your 4 hour, and I'm assuming this is the 1 hour. So the next thing I want to do is I just want to find polarity in this move. I just want to find what's happening. This can't be the 4 hour. It's already hard closed and broken. It was tested. It broke up. Went for the larger piece. Fine. C'est la vie. Move on. Let's find polarity in this. Find polarity. Where can it exist? It can exist here. It can also exist here. So let's go see which one of these it is. Probably that bottom one's going to be broken. Okay, that's broken. Oopsies. No. Actually, it looks like the top one's broken too. Top one's broken too. So like, we don't have anything here. And actually, you're just holding this move. This is really important for me because I want to know if the move is polarized from here or if it's here. The difference being, if the move is polarized from here, what's going to happen is you need to hard close break over that as polarity. Right now, it's following like a ladder of moves. Obviously, hits this ladders. And that's what I was explaining on the live stream there a few days ago, that you're really hoping for this thing to continue laddering. So like, now you're starting to dig in and find where this thing is moving. So now let's go to the hourly charts. This hasn't been hit yet. That's fine. So this is going to be a reverse level, right? This is hit there twice, 3 times, making this a reverse, never hit. I guess you can consider this hit here. So your next level would be like right here, which is trend. So this is the kind of like the ladder that I need to break in the move. I'm going to go down one more time frame and just make sure. 15-minute right here. That's tested perfectly, actually. Next 15-minute would be back in here. Not tested, right? I think I'm comfortable with, don't really want to use this 15. Actually, I would almost like to use a 4 hour and see what we need to break above as well. So my first step in everything was the overlying part of the move. The second step is like finding polarity. Or if you can't find polarity here, you're going to find it on the interior piece. So let's see where polarity can exist. Start from the 4. Yeah, we have this, but I wouldn't use that for polarity. In terms of a 4 hour, that could turn into an origin. You have this right here, could possibly be it as well. So you have a 1 hour. Just make this a dotted line. That's fine. It could be this. That would be the next ladder point in the move. So this, it would be the current kind of polarity. This is just showing the trail of the move. So that would kind of be the current polarity. So don't, that part of the move can still ladder this. A polarity to the move. You break above that, you're probably off to the races. The only last thing you could kind of create would maybe be something from here, because I don't think you had anything else, right? Yeah, no. The only thing you could possibly create is like this as a break on the move, could create an origin. I think you're getting pretty high at that point. I would also like to see this one. I'd like to see both of these on my chart. So like, I don't really think we have kind of this final point of polarity yet. I think you have what could be a break here, turn into origin, break here, turn into an origin, ladder the move, local polarity. And I think you look at these targets and see which one is going to pull it back. And right now it looks like this will hold the move because you're creating floats. So that would be the next step, like the third step. So the second step would be about defining polarity. And then the third step would be about starting to understand the move. So step number 1, create the outlying pieces, trends, levels, expectations. So there's no MA shocks. Step number 2 is find polarity in the move to see if you're and this is for right now because we're breaking up. If we were in the middle of the range somewhere, like if we were, I don't know, like right here, for example, I wouldn't be looking for polarity to say like, oh, we're reaching a new high. We're about to break a weekly trend and get over top of a range, which comes from our first step. So we know we're about to get over top of a range. So we know that finding polarity at the very top of the move should be our number 1 objective right now. So outline piece to define if MA things, and also for polarity reasons to find that. Number 2, find polarity in the move. There's no polarity, find the parts that would break it out. Right. Number 3, analyze the interior point of the move. So now is a part where I would say, okay, let's analyze the interior piece. We did just create like ladder. So when I see that we're creating ladders here, like I just have to analyze the interior of the move, right? You break up with trend, that's fine. You start moving down. You create your first ladder point, okay? That should tell you, are you laddering from this or are you creating a float off of that Well, we created a float. So before we hit that next top, we create the float, right? So now we would expect something to ladder the move. And at the last part of it, as long as it ladders this, that's fine. Hits the level again, creates a float. Now we just need to stay under this. So for that reason, I wouldn't use these currently if I was looking to short. I would just simply not use them because I would want to see these floating levels start to define like larger pieces, right? Float, float, break the move. You've got a trend, right? So now what I would like to do is I would like to start with some interior trends. So define the kind of interior piece where it could go, right? We got daily there. It's going to adapt on the 4 to here, right? That's fine. So then you have like a daily adapted to the 4. So we can just color this to that right there. And now I'd like to see like there's going to be kind of this next part of the move that makes sense. So the third part of this move is I analyze the interior piece. And then the fourth step of this move, or the fourth step of what I would do, was kind of outline my expectations. So now my expectation would be something like this. Hit this level because we did create a float, true and true, yes. So hit the level that creates the float. You now have one of two outcomes. Outcome number one, you hold your interior trend and you actually start to move up. So if that happens, you start looking for longs or you take exits on your short. Number two, you create the float and have your final interior trend, right? And if you can even ladder off this, because technically what should in a technical sense happen, you should break underneath this and create a new float if this stops you, right? Or, what this could also stop you. It could just have been stopped right there, right? So now we have this very stark decision. So after all of that, we're left with, only a few possible outcomes that could ever happen. If this ladders the move, this is either going to break that ladder on the top side and you're going to stop floating the move because it's going to be like hit the bottom, create a float, ladder the float, move up against this stuff. So if the trend holds, I know I'm going after this. Technically, the trend shouldn't hold, but if the trend doesn't hold, you're going to float here and you could face a possible dump for breaking this trend, or you could create your final trend by going like this, right? Oh, sorry. Oops. By going something like that. And, then you have a trend that even whatever, like it's small, but it's still there, right? Like it's slight, but it's still there. So it's kind of like your base foundation of how you would draw out a move. You would look at your exterior component first, right? Just go through this one more time. Exterior component first to give you general expectations and no shocks. After that, depending on what your exterior is showing you, that's going to tell you where to look in the charts, right? And our exterior told us we're right at the top of the range of a move. We haven't quite hit the break yet. And if we're going to ladder down, it's going to be because we didn't hit the break level and we're not creating a breakout in the move. So pretty important moment coming. That's step one, outlining expectations. Step two, find polarity in the move because we're at a moment where polarity is important. Because we're at the top of the range, we've identified that polarity is what we need to find. So as long as we can identify, so step one, we create the outlying effect. Step number two, identify what that outlying effect would give us. Also for MA reasons, it's just a nice kind of all wrap in one. Our outlying effect defines that we need to understand where polarity is in the move because we're right at the top of a range about to hit a break level. So finding polarity on the top side is a must. Notice how I charted almost nothing on the bottom. I don't care about the bottom right now. I care about the events that happen on the top because the events of the bottom side of this little interior piece, they don't mean anything. They're not going to do anything. It's going to be the events of the top here that decide the move, not what happens down here. So I don't even care about charting the bottom of the chart. So that's step number two. Step number three is to create your kind of interior part of the move, like find your interior TA based on your exterior. And then step number four is draw out the scenario that would happen. So that's going to be like your bread and butter for how you should look at the charts every day, right? And it's a very simple funnel. Outside information, decrypt that to find what you need to look for, polarity in our case. Find the polarity, then you prescribe the interior part of the move as step number three, and then you outline your parts that interior can go to, right? So it's almost like step one and two repeated over again. Step one and two exterior, step one and two interior, if that makes sense. So just the two-step process, just repeated, and you can continuously funnel that repetition of step 1, 2 down, and you could do another layer and go to even micro timeframes now, everything under the 15-minute time frame to get a third layer of that. If you wanted to go that deep and find the exact moment where you should enter a 1 minute 100x scalp, then you can go for a third layer of just outlying moments that lead to interior decisions, right? And then outlying moments of those outlying moments that lead to interior decisions of those interior moments. So that's the way that we do it from zero, where you just walk in. That's your bread and butter of charting. That's the process that you should do every single time you open your charts. Just that simple kind of. I'm making it sound simple, but realize that we still use every tool. So we have hundreds of tools that we use. So, I'm may sound simple from the outside, but then, finding polarity and understanding that that's it. And a floating level is a very fast way for us to get to that information, but it could have been anything. So it's not so simple as what I'm saying. But as long as you know what you're looking for, then it is quite simple.